The value of money is not static in the short term. It may ebb and flow against other currencies on the market, and in the long term, a currency tends to lose buying power over time through inflation as more currency units are created. Inflation occurs as a result of too much money chasing too few goods, and it is often influenced by government policies, central banks, and other factors. In this short timeline of monetary history in the 20th century, we look at the changes in money supply and the buying power of the US dollar in each decade. By the 1900s, the US money supply sat at roughly $7 billion, and a dollar during that time could buy a pair of good patented leather shoes. By the 1910s, the money supply had increased to $13 billion, which could buy a nice woman's dress. By the 1920s, the US money supply increased by $35 billion, which would buy you 5 pounds of sugar. And by the 1930s, the supply again increased to $46 billion, and what $1 could buy was 16 cans of Campbell's soup. By the 1940s, the U.S. money supply continued to increase to $55 billion, and $1 could buy 20 bottles of Coca-Cola. In the 1950s, we again increased to $151 billion, and a dollar at that point in time could buy you one Mr. Potato Head. In the 1960s, U.S. money supply increased to $211 billion, and $1 could buy you 2 movie tickets. By the 1970s, the U.S. money supply increased to $401 billion, and $1 could buy 3 Morton TV dinners. And then again in the 1980s, the U.S. dollar supply increased to $1,560 billion, and $1 could buy you 1 bottle of Heinz ketchup. As we move into modern times, the 1990s, the U.S. dollar supply increased to $3,277 billion, which $1 could buy 1 gallon of milk. And by the 2000s, U.S. money supply increased by $4,917 billion, and a dollar could buy you $1 could buy you a Wendy's hamburger. By 2010, the U.S. money supply increased to $13,291 billion, and $1 could buy you 1 song on iTunes. At the turn of the 20th century, the money supply was just at $7 billion. Today, we are literally 1,900 times more dollars in existence today than we were during the time frame of the earlier 19th century. While economic growth has meant we all make many more dollars in today's time, it is still phenomenal to think that during the past moments in the 20th century, a dollar could buy a pair of patented leather shoes. The buying power of the dollar has changed significantly over the last century, but it's important to recognize that it could change even faster considering that countries around the world are becoming more independent and less dependent on the US dollar. With that said, if you'd like to get more information on this topic, you can pick up U.S. Money Reserve's latest report, In Debt and Out of Time. It has a lot of great information in regards to the topic discussed today, and it can also give you some insight on the devaluation of the US dollar. So please call the number on your screen or click on the link below to get your copy. If you're watching from YouTube, subscribe to our page so you don't miss a single episode. I'm U.S. Money Reserve's Coy Wells, and as always, thank you for watching Market Insights.